Hi guys, Megha here. Welcome back to hashtag Megha says. Today I'm presenting my sixth video in front of you uh, about financial concept. In yesterday's video, I explained about financial statements as well as I told about some financial concept. In that, I told you about stock, goods, then transactions, then income, expenses, drawing, capital, liabilities, and all these concepts we see in depth, so that we could understand the finance betterly. Actually, when I started to study the finance, I realized that finance is very simple. It's not hard as that much as we think, uh, but it gets hard to us because we understand very less concept of finance. We know the meaning of very less concept. That's why it becomes difficult for us. But if someone tries to understand all the concepts of finance and then started the study of finance, then it becomes very easier to make the study of finance. So now I'm trying to understand more and more financial concept, so that I could understand the finance in better way and I could tell you about the finance in better way. So let's start our today's video. Today I am going to explain another concept of finance, also the rules of finance, that is called as golden rules of accounts. Firstly, let's see the finance concept. um, we had seen about capital. We see that capital means the stock of ownership of a company. Means suppose I want to start any business, then I must invest some capital in that business, so that I could run my business effortlessly. Firstly, I can invest my capital in the form of cash. I can invest in it in the form of asset such as furniture, building, land, machinery. All this type of capital I can invest in my business. But there is another concept which is known as a working capital. Working capital means what? Working capital means the cash flow that is required to continue our daily activities, such as suppose I am in a manufacturing trade or manufacturing company. Then I must buy some inventory, buy some raw material that will help for the my production. So I for that I need some cash. Though I am not paying the full amount of cash, but I have to pay at least a 50% amount of that cash. The requirement of that cash is known as a working capital. Working capital means the capital which is in the use for daily purpose, for our daily routine, that is known as a working capital. Working capital is calculated by current assets. Current liabilities minus current asset, that is the formula for the working capital. Uh, next point is a capital revenue. Capital revenue means what? The income which is earned by daily work, daily routines. Suppose let's take an example of our institute. We are in the service sector. We give computer courses service to the students who are required, who wants to do the job in future. When they paid the fees on daily basis, then that becomes our capital revenue. So these are the basic financial concept about capital, which are very unknown to all the people. The next concept is that debtor. um, while doing transaction, there are two parties. First one is a creditor, another one is a debtor. Debtor means what? Debtor means to whom we purchase goods. Debtor means to whom we sold the goods. In simple way, we can say that they are our customers. Suppose I have my own shop of stationery and I am selling the goods to my customer, then they becomes my debtor. That's why debtors are mentioned on the asset side of the balance sheet, because we sold the goods to them and they have to pay us the cash. So that becomes our receivables, that becomes our asset, that becomes our cash in hand. That's why they are mentioned on the asset side. Another side, there are creditors. Creditor means the trader who sold the goods to the customers. Suppose as I told, I have my own shop. In that shop I become a creditor because I am selling goods to my customer against the cash. So if in our balance sheet I want to mention the creditors, then the creditors will be those to whom I have to pay the cash, because I had purchased the goods from them and or services from them, and then I have to give them a cash. So they are mentioned on the liability side. Another time, there is some confusion between goods and services. Goods means the physical commodity that we can use, such as a mobile, computer, laptop, or water bottles, bags, notebooks, books, pen, pencil. all these come under the goods, because that is a physical commodity that we can use, we can make their daily use in routine. But services means there are no physical commodity, but they are just given to the customer, such as beauty parlor services, parking services, education services that we are giving, consultancy services, taxation services, tax consultancy services. Here there is no physical commodity given to the customer, but there only advice or only a service is given to the customer, and against that service cash is taken. So these are two different concepts, goods and services. The next concept is that we see about financial statement, balance sheet, profit and loss account, trial balance, then trading account. In that trading account we see about income, expenses. In that we see direct income, direct expenses, indirect income, indirect expenses. At that time I mentioned about profit and loss. So let's see what is meant by profit and what is meant by loss. Profit means what? Profit means when I earn extra money than my expenses. Suppose my expenses are 20 rupees and I got 30 rupees at that time, then the extra 10 rupees that remain, that becomes my profit. This is called as profit. And the purpose for running every business is to earn the profit, to improve our lifestyle. For that reason business is run. And the next point is loss. Loss is vice versa to profit. Means suppose if my income is 20 rupees but my expenses are 30 rupees, then I have to pay extra 10 rupees, that becomes my loss. So this is profit and loss, which are another important concept in our business. Now let's see three types of account. When we do any transaction, at that time we have to divide that transaction in 3 points. First one is a personal account, second one is the real account, and third one is a nominal account. Personal account is, in Marathi it is known as Vayaktik Khate or Vyaktigat Khate. In this account all the names are mentioned, such as the name of company, name of person, name of bank, name of institute with whom we are doing transaction, that is mentioned in personal account. The another one is a real account. Real account means what? Real account means the goods which we can see, we can touch them, and we can make their use. That is called as real account. In Marathi it is known as Vastunishta Khate. So all types of physical commodities, all types of goods are mentioned in the real account. If we are talking about our business, then for our business the real account will be cash, because we can see that, we can feel that, we can touch that. Then furniture, obviously we can see that also. Then land, building, machinery, goods, all this comes under the real account, as it is related to physical commodities. And the third point is the nominal account. Nominal account, this account is related only about income, expenses, profit and loss. Means if we are earning income, if we are doing expenses, if we are getting profit, if we are in the loss, then this is mentioned in the nominal account. That's why this is called as Namamatra Khate. There are some rules of accounting which are used for making the sorting of of our transactions. The first one, which is related to personal account, the rule of personal account is debit the receiver and credit the giver. Means suppose if I am taking goods, then I comes on the debit side, and the person who is giving me the goods or who is selling me the goods, he comes on the credit side. If you are a receiver, then you goes on the debit side of the transaction. If you are a giver, then you goes to the credit side of the transaction. The second one is a real account. The rule of real account is debit what comes in, credit what goes out. Suppose if you are purchasing goods and you are giving the cash, then in your notebook or in your book, accounting book, the goods will be on the debit side and the cash will be on the credit side, because goods is coming to you and cash is going from you. The last one is nominal accounts. Its rule is debit all expenses and losses, credit all income and gains. If you have done an expense, or if you have faced the loss, then that should be mentioned on the debit side, such as wages paid, or loss by fire. It is loss of our business or dead stock. All this is mentioned on the debit side. While credit all income and gains means, suppose if you got any income or if you get a profit which is excess than our expenses, then it is mentioned on the credit side. If we understand these rules betterly, then we can do our accounting in a better way, in a best way, and in a good manner. So this was my today's video about another accounting concept. Tomorrow I will explain some extra accounting concept in my videos. Thank you so much. See you tomorrow. Bye.